Case in point 1-3, determine the impact on accounts. We have completed transactions 1, 2, and 3 in previous videos. This video will go over transaction number 4. Transaction number 4, Nathan's Donut Shop opens for business and on its first day earns $850. As of now, the company only accepts cash payments. Step number 1. The company received cash in exchange for services and in doing so has earned revenue. Therefore, the cash account and service revenue accounts were impacted. Remember, for every transaction, at least 2 accounts are impacted. The company has more cash than it did before and has now earned more revenue than it had previously. Therefore, both accounts have increased. $850 would then be recorded as an asset. Cash is an asset, so cash would go up. And on the other side of the coin, it would also be recorded as revenue. Revenue is included in our owner's equity, so that would also increase. And then you would also confirm, after analyzing this transaction, that our assets, $37,350, still equal the total of our liabilities and owner's equity, which is $37,350.